If you're dealing with a denied or delayed life insurance claim, one of the first questions that often comes up is whether the policy could have or should have been converted from term to permanent coverage before the insured passed away. Many beneficiaries only learn about the conversion option after the death, often when the insurance company uses it as a reason to deny the claim. Today I'll explain what convertible type term life insurance is, how conversions work, and most importantly, how these rules affect your legal rights when these claims are being challenged. What is convertible term life insurance? Convertible term life insurance is a term life insurance policy that allows the insured to convert it into a permanent life insurance policy without completing a new medical exam. This feature matters because conversions often protects people whose health changes over time. From a legal standpoint, understanding whether a conversion was available and whether the insurer properly notified the insured about deadlines can influence whether a denied claim can be reversed. How does convertible term life insurance work? Most term policies include a conversion window, usually only available during the first part of the term or before a certain age. No medical exam requirement. The insurer must treat the insured as if they had the same health rating that they had when the term policy was originally issued. Full or partial conversion. Some policies allow you to convert the entire death benefit, and some allow just a portion of it. And permanent coverage options. Whole life, universal life, or other permanent products by the insurer. If the insured died close to the conversion deadline or was never properly notified of the deadline, an attorney may be able to dispute the denial. Here are key legal facts and features that a beneficiary should know. These are not just financial features, they affect your rights. Number 1, guaranteed insurability. If the insurer failed to honor this or restricted the conversion improperly, it may be a legal issue. Number 2, conversion deadlines. States have strict notice requirements. If the insurer failed to send proper notices, beneficiaries may have grounds to challenge a denial. Number 3, age limits. If an insurer applied a deadline incorrectly, the lapse or denial may be contestable. Number 4, right to retain original health rating. If the insured was sick before the policy expired, conversion might have been their only path to permanent coverage. Why does convertible term life insurance matter in claim disputes? Many families discover the conversion option after the claim is denied. Insurers may deny claims by arguing that the term policy lapsed or expired before death, that the insured should have converted but didn't, or that the policy was no longer active because the conversion window had passed. A life insurance attorney will examine whether the insurer sent required conversion notices, whether deadlines were wrongly applied, whether the insured relied on agent misrepresentations, whether the beneficiary can argue reasonable exception of coverage, or whether late or partial conversion should have been allowed. What are the potential drawbacks of convertible term policies? A missed conversion deadline may become the insurer's justification for the denial. Policies are often complex, and beneficiaries usually never see the conversion clause. Insurance agents may fail to explain conversion options properly, and insurers often send notices to outdated addresses. This is a frequent cause of wrongful denials. Any of these issues can be grounds for claim recovery, depending on the state. When should policyholders consider converting? Beneficiaries often ask, could this death have been covered had the policy been converted in time? Here are scenarios where the conversion is especially relevant. The insured was sick or uninsurable before the term ended, the term expiration date was approaching, the insured relied on an agent who never explained the conversion right, the insured thought that the policy automatically renewed, or premiums increased suddenly due to age or renewal rules. If any of these apply, an attorney may be able to argue that the insurer's communication failures contributed to the lapse or expiration. What happens when someone tries to convert too late? Before death, reinstatement or late conversion may still be possible under reinstatement clauses, extended grace periods, or state protection requiring proper notices. After death, conversion is no longer possible, but beneficiaries may still recover if the lapse or expiration was caused by insurer error, unclear communication, or failure to follow legal notice requirements. Here are some alternatives that families should know about. If conversion wasn't used, beneficiaries often ask what could have been done. Some alternatives include level term policies, renewable term term policies, buying a new permanent policy, or extending coverage with riders. These alternatives matter because it helps attorneys assess whether the insured reasonably expected their coverage to continue. How does a life insurance attorney evaluate claims on life insurance conversion? When a claim is denied because a policy wasn't converted, an attorney typically reviews the full policy and all amendments, the premium payment history, all lapse, grace period, and conversion notices, any phone calls and emails between the insured and his agent, and state laws governing conversion and lapse notices. If the insurer mishandled any of this process, beneficiaries may still be entitled to the payout. If the insured died after a term policy expired, or if the insurer claims that the policy wasn't converted in time, that doesn't automatically mean that the beneficiary loses. Many denials tied to conversion are overturned because of improper notice, confusing policy language, agent negligence, state law violations, and insurer administrative errors. If you're dealing with a denied or contested claim relating to a lapsed or expired term policy, it's worth having an attorney review the policy language and notice timeline.